All right, guys. Hopefully you're on. We're live. We're up and running. As far as commenting in on the webinar tonight, use the first thread. So there's two threads. Let me get out of this. I'll show it to you. There's two threads here that have been created. There's this thread here underneath this criminal post here, and there's this other thread here for some reason. So let's reply in this one tonight, which is the one that has the link attached to it. And so we can have our discussion, ask your questions, make your comments, and all that here in this thread. All right? Done and done. Perfect. Okay, let's get after it, shall we? A lot to talk about. You might be able to hear the anger in my voice. It is real and authentic, I can assure you. Let's see. I joined this GTG group, whatever you want to call it, Trade My Money, 6 years ago, 6 years ago, whatever it is. 7? No, 6. Had to be something like that. Anyway, I've been with these guys for a long time. I've been in the back offices. I've seen behind the curtain. I know how things work and how things go. I've seen this coming for a while. But what's happening in my mind, in my opinion, is a travesty. And it's happening to you, many of you, unfortunately. It's happening to a lot of people who aren't in this group. And I wish they could somehow catch what we're going to talk about tonight as well. So I'm going to talk about your corporate account, the things that are changing, what's going on, and what we can do about it. All right? I appreciate you being on tonight. I appreciate also your confidence and your confidentiality. We're still a little bit under the radar until we have certain things taken care of. So this is a conversation between us. If you have a friend or family member that's suffering because of this, I would not mind you talking to them as long as you have confidence and trust in them. I want people to be helped. So tonight, hopefully, this is a bit of a balm for everyone, that they can get some assistance with it. The rules have changed, and things just got tougher. Imagine the pressure and the frustration and the anxiety of trading a live account in and of itself. Now let's add to the fact that these people are making you trade like dumb retail traders trade. Tight stop losses on every trade that you do. That is a dumb retail trader. You're playing right into the hands of the institutional investors and the brokers that need you for liquidity. A broker needs you for liquidity. I don't know if you knew that or not. But they have big investors with lots of money that put in orders. These brokers need somebody else on the other side of these big orders, and they're counting on you to be that person. I can guarantee you CoinEx, every other broker that's out there, has big institutional investors that have a little bit of money with them, a couple $1 million or whatever, and they need you to be on the other side of their trades. Stop losses are a perfect way to make that happen, right? You got to trade one. Now, I heard this when I first heard this, I thought maybe you misheard it. Maybe this person was but I've heard it now from several different sources. You must trade 1% of your account for every 10 pips. Do you hear my fist banging against the desk? 1% of your account for every 10 pips. Do you realize how much risk you're taking on in your account by doing that? I've taught, how many times have you guys heard me talk about don't try to swing for the fences? This is about long-term, consistent growth over time and building and creating something. Trading 1% of your account for every 10 pips you trade is straight up gambling. So anyway, they want you to do that. 4 to 5 trades per day, I've heard that. Now, I'm pretty sure this is not what you signed up for. This is not what you were told when you signed up. Right? Or at least this was not what you were told in your coaching or some other sources where it's like, get out of the gate, start small. Live trading has some psychology behind it. You need to make sure you grow into that. No, these guys want to open it up, right? I know that there's been many people, especially the people that are in charge of funding, that have said in the past, even if you make a little bit of money on your equity, we'll give you a full quarter funding, like another $3,000 or $4,000. You heard that, testified at the big meetings they have every month or every other month. When blowhards like me stand up and give a talk, or it's one of those 6-hour presentations, and a certain member of the company will get up there and say, "Okay, now listen, we want to talk about funding, and this is how it works." They said, "Stay small, just grow your account, have an equity increase, and you'll get more money." Apparently that's been blown out of the water, because now if you have any open positions, if you don't have everything closed out, but even if you do have positive equity growth, you can still experience them saying, sorry, no, doesn't work for us. So they've changed the rules since you've signed up. Let this be the catalyst. Let this be the match that lights the fuse that finally holds these guys accountable. To me, this has got to be one of the last straws. So anyway, I'm going to talk today about a couple things, because listen, the rules have changed and it just got tougher. However, as angry as this nice looking woman here is, there's a couple things we can do. Number one, we can hold them accountable for this bull crap. Okay, and I'll show you how we do that here in a second. And second, if they want us to swing for the fences, if they want us to take risks, if they want us to change how we trade and change our strategy, fine. We're going to do it, and we're going to do everything we can to get their money. Okay? So I'm going to cover these two topics here. Hang with me. I'm not sure how long this webinar is going to be. I haven't timed any of this stuff out. I've got a lot of content. It's semi-organized, mostly organized. So hang tight, but everything that we do is going to be inside these two topics right here. Let's hold them accountable. Let's get their money. A couple people coming in here with comments. How do they enforce this? It's simple. They won't give you any money. If you don't trade the way they want you to trade, which has never been an issue before. How many times have you guys heard, we want you to build your own strategy and trade your style? Look at these different coaches on these webinars and find out what you like and build your own system and your own, do it your way. As long as you're growing your equity and you're not drawing down your account, you're fine, right? Not anymore. Not anymore. Now you're going to go for a 1.5 pips on a trade with a 10 pip stop loss, or you're not going to get funded. Welcome to the new game, right? So let's start with this. Number one, you can voice your frustration and promote accountability. There is a private channel that I've just created called TDT, Accountability. Try Day Trading, that's what that's short for. Where we're going to, I've already got people engaged in this, folks. There's a lot of people that are incredibly frustrated, and we've got a tremendous force behind us. We've got methods and avenues with different institutions that we can hold these guys accountable and start to force them to make changes or look at how they're doing business, right? If you go to that channel, you can tell your story. There's an email address that's been created called gtgproblems@gmail.com, where you can tell your story, get communication, get updates from this group, this organization, I guess what you call it, of people like you that have been suffering and dealing with this kind of crap. We're going to give you updates through this email. We're going to collect your information, get your story, collect evidence through this email, and build our case. Once we've got it built, once we're organized, we're going to take it to these institutions that can actually do something about this and hold them accountable. Why is this a good thing? Some of you have been harmed financially. I would imagine all of you feel like you've been harmed financially, but some of you to a certain level that you could, if a certain precedent was in place, get some kind of something for your damages, right? How much easier would it be for you to go to an attorney and say, hey, this company here, who has now been officially filed complaints with FTC, with Better Business, with these organizations here, and have had claims against them, injured me, and I want to see what I can do about it. I was not told the truth about these things. I was misled. I was misrepresented. This is what was told to me up front. This is what actually happened to me. And go through your story and see what you can get hopefully in some kind of return. I'm not sure if that's possible or not, but it sure helps your case if these guys if their feet are being held to the fire by some organizations that are holding them accountable, right? Right. So here's a comment here. If enough people start complaining and losing money, they will draw attention from regulators and be investigated. That's exactly what I'm talking about. But if we're all silent and we say nothing and do nothing, who else is going to be hurt by this? How many other people are going to have now $15,000 to $20,000 of money that they don't have taken from them and then given this crappy strategy with rules they're trying to teach people so they can immediately lose the thing in a month or two? Right? So anyway, let me exit out of this. If you're interested, and I would imagine every one of you are, I don't know why you wouldn't be, direct message me, and we can get you into this private. It's a private channel, so it's locked up. So even our members can't get into this. I have to invite you into this private channel. TDT accountability is what it's called. If you direct message me at the third wave, it's a simple, couple clicks of the mouse. I can add you into this, and we can get you started. Once we build enough of evidence, enough of a case, and we have it organized the right way, we're taking it. And I have other people that are not in this group. I have other individuals that aren't members here that I can reach out to, and we can create a bit of a grassroots movement. And I know if enough, just like the comment said, if enough people are engaged in saying, hey, I want these guys accountable, they're going to be held accountable. Okay? That's how you get started. I highly recommend you direct message me for access to that private channel. Okay? Get in here. All right. There's that. Oh, I'm angry. I'm angry, but look, there's a way to do this, guys. So hang tight with me. Second, you can adjust your. You're going to have to. You're going to have to adjust your strategy, but you can adjust your strategy with this corporate account and get their money to the extent that you can. You want to hear something really scary? How many people have you heard successfully pull money out of CoinEx? When's the last success story you heard that said, yeah, I did a withdrawal from my CoinEx account of $5,000 and I hit my account and I've got it. So that's another thing that's frightening. CoinEx is not regulated by anybody, international bodies or domestic bodies, and wherever country they're in, they're not regulated. So if they fold up shop tomorrow and they're gone, that's it. What happens to your corporate account? This is the same thing that happened with Capital City, 2 years ago? And that one just burned a lot of people, including the company. The company had to put up money. They lost big on that one and tried to save face in a lot of ways. So anyway, but the thing is, it's a sunk cost. You've given these guys money. Many of you have prepaid these indicator fees to a certain date. Whatever that is. Okay, fine. I have a certain window here where I can change up my strategy and get these guys' money. Let's go get it. To do that, I need to make sure everyone's on the same page with risk-reward strategy. Many of you understand this, but I'm going to tweak this a little bit to fit this empire, these rules that they have. Also know this. Even though they've given you these rules, I'm going to show you here in a minute how it's going to be really hard for them to enforce them all. So hang tight. Please watch this video all the way through the end. All right? Risk reward. Clear your mind for a moment. Let's talk about risk reward trading and the rules behind it, and get a foundation set here. I need you on board here. Risk reward is a stop loss strategy. You protect your position with a stop loss. It compares the expected return of a trade with the risk associated to earn it. And we have these ratios. See down there at the bottom? 1 to 1, 2 to 1, 5 to 1. What that means, the number in first position is your risk. The number in second position in that ratio is your reward. So if you have a 1 to 1 trade, that means you're risking $10 to make $10, or you're risking $500 to make $500. It's 1 to 1. If it's 2 to 1, you're risking $2 to make $1. 5 to 1, you're risking $5 to make $1. Got me? Now, this is important because you need to know your win rate. And not just your win rate on your strategy, you need to know the win rates you're going to need if you're going to break even, based on the ratio that you're using. For instance, if you have a 1 to 1 risk reward ratio, You've only got to be successful 51% of the time to be breaking even and then making money. Okay, even if it's a little bit. 51% or better, you're at least treading water, if not growing an account to some degree. As you go down this list, 2 to 1, 3 to 1, 4 to 1, notice what happens with the win rate that you need to be successful. Up to a 5 to 1 risk reward, which is what they're basically telling you to do. This is what's being taught. If you're going for a pip and a half or 2 pips on your win with a 10 or 12 pip stop loss, you're trading at 5 to 1. And you need an 84% win rate to be successful. Right? Where a lot of the trades I do like a 1 to 2. I like the 1 to 2 and 1 to 3 stuff where I don't need to be right all the time. I'm going for a bigger win. Okay? And I'm keeping my losses minimal. But, we're not trading that way right now. We're trading with the stuff on the left. Let's go into a little bit more detail on this. Again, clear your minds. Let's talk some math. Let's calculate our risk. Now, this is an example I would give to a brand new person that is just now trading live. He's just now trading live. I saw Cherry Blossom put up, Empire had a commercial in the Jazz game last night. The guy who hosts halftime with Thurl. He said he signed up and saying how amazing it is. Have any of you seen that commercial? I can tell you that gentleman does not trade. I know that for a fact. Does not trade. He's there to sell. He's a celebrity spokesperson. And this is the same thing that got that company in Pleasant Grove in trouble. They had celebrity endorsements from celebrities that were not using the product. And that's one of the reasons the FTC came down on them. This is the same thing that they're doing. Anyway, regardless. Gets back to this. Calculating risk. Balance of $3,000, which is something that many of you are dealing with, especially when you're starting out. Okay, risk is 1%. So 1% of my balance is $30. So I'm not really willing to risk any more than $30 on any trade that I place. With me? Now, if I had a lot size of 0.01, because I'm brand new, I'm scared, I have a lot of psychology I still have to overcome, and this live trading's new, I got butterflies all over my stomach, I'm going to trade the smallest lot size I can. Well, if you did that, a lot size of 0.01 at 10 cents a pip, your stop loss could be as much as 300 pips away, because a 300 pip stop loss at 10 cents a pip equals $30. That's your risk, right? Okay, this is not how the Empire wants you to trade. This isn't how I want you to trade either. I don't want you trading 10 cents a pip on a $3,000 account forever. I want you to eventually grow into something that's a little more sophisticated. This is how you would start. In fact, this is what they told you. This is what the Empire told you to do as much as 6 months ago or a year or 2 years ago. Do this. They would like to see you, beef it up once you get consistent, but this is now what they're talking about. You have a balance of $3,000. Your risk is 1% for every 10 pips. So you're risking $30 for every 10 pips the trade goes against you. That means you have to use a lot size of 0.30, $3 per pip. If your stop loss is 10 pips, that means you just got hit with a 30 pip stop loss. Now, how many of you know that all of these pairs, most all of them can sneeze and move 10? Heck, most of these pairs can sneeze and move 20 or 30 pips on just a little bit of economic data or a little bit of tweak in the market, right? 10 pips is nothing. 10 pips is a sneeze, a blink. But that's where they want your stop loss. Okay? All right, we're not gonna play this game exactly. I'll show you how we're gonna alter it in a little bit. I want you to go through another little math exercise here with me. If we're trading that $3 per pip, now I know they say go for a pip and a half and hit the button 5 times. I'm gonna give them the benefit of the doubt. I'm gonna go for 2 pips. I'm gonna go for 2 pips at $3 a pip. If I win, that's a $6 profit. With me so far? Origin, what I'm trying to teach you is lower your lot size, push your take profit further out, go for more pips. In this case, if I had a 30 cent per pip trade and I went for 20 pips instead of just 2, I'd have the same doggone return, $6, with 1/10 of the risk. So what's going to happen with you? You're going to be somewhere in between these two examples with your trading on this corporate account. I think that one at the top is an extreme example. We're going to find ourselves somewhere in between these two, messing with the lot size, messing with how many pips we're going for, things like that. But I'm trying to show you why the example above does not work. If you take a 10 pip loss on that trade on the top, you're going to realize a $30 loss, right? If you were to lose 30 bucks on this origin trade at 30 cents a pip, you would have to have a 100 pip stop loss. Your trade has to go 100 pips against you in order for you to realize that same loss. How much more cushion do you have using that? Does that make sense to you? You got a lot more cushion, a lot more breathing room if you lower your lot size and ask for more pips on your take profit. It's that simple. You're being forced to take excessive risks. That's what these guys are doing to you. That's why I've got the anger in my voice. It's like, give us 15 grand. We're going to give you a crappy strategy that's going to cause you to blow your account in less than 2 months. And when you ask us what the problem is, or say, hey, what's going on, we're going to say, you need to work on your entries. Let's give you some more coaching. That'll be another 5 grand. And let's bump you up. Yeah, let's get you another coach. You got to work on your entries. That's the problem. Just work on your entries, right? Oh my gosh. So basically what this is requiring you to do is to have an 84% win. Where does that put all the pressure? An 84% win rate. 84% win rate. Where's the pressure? On your broker? The pressure's on you. Because you've got to find the signals. You've got to find the lines that are crossing. You've got to spend more time in front of your computer. You can't just get into a trade. You got to wait for the right entries because you cannot have this trade go against you. 84% win rate is a lot of stress, right? Man, there are people in New York that trade for JP Morgan Chase that would laugh at you if you told them you had an 84% win rate. And that's to break even. Do you realize that? 84% breaks you even on these trades. It was a Lemma Harrington. Pipsqueak wants to know. It was a Lemma Harrington. Win rate, 84% to break even. Hey, though, if you get 85%, you're starting to make some money. All right. So let's break this down. Let's talk, and I'm going to trade in front of you. I'm going to show you how I would set up my charts and how I do that here in a second. Let's start with this, okay? Balance, $3,000. Now, they've told me I've got to place a certain amount of trades, so I'm just going to say I want to be able to place 3 to 5 trades a day. And we'll talk about why this is, can be tweaked here in a second. Percent of my account I'm willing to risk per trade, I'm going to say 1 to 2%, meaning on each trade, you don't really want to be risking more than 30 to 60 bucks, okay? You want to keep it in that range. Typical lot size, I'm going to say between $1 and $3 a pip. However, and I'm going to show you how this works here in a second, there's some trades you can lower your lot size on, like we were talking about a second ago. Lower your lot size, ask for more pips, and have a trade that's a little more likely to win for you mixed in to this, okay? So you might see me do a 50-cent trade on some of these. I'm going to have 2 strategies. Strategy 1 is a day trade where I'm going to do 1-to-1 or 2-to-1 risk-reward ratio. And I'll show you the setup for those here in a second. A second strategy that's going to be mixed in, and again, they can't tell the difference. They really can't tell the difference. And I'll show you why here in a little bit. Strategy 2 is going to be a swing trade, 1-to-1 or 2-to-1, where you're going to lower your lot size and you're going to ask for more pips on that trade. These will be mixed in. So these will be complementing and helping each other, right? And that could also be accompanied with a trailing stop just to give you a little more added protection. So you're taking a little less risk. There's no strategy for recovery because you can't hedge and you can't average. They don't want you doing that. I don't know why they teach it anymore. I don't know why hedging and price averaging is a freaking thing, because they want these stop loss things going. So now, and by the way, now that I'm gone, there's no one there that teaches people how to hedge anyway, because no one knows how to do it. So, and maybe that's one of the reasons why they're getting away from it. I don't know. Margin, I know I teach you 2,000%. We're going to push the accelerator a bit. I'm going to say try to keep, once you're fully loaded with your trades, try to keep it above 1,000 if you can. Okay? Don't go below that, or you're overloading yourself. Okay? And I'm going to show you a full-on trading example of that here in a second. Before I do, let me just add a couple things in here. The rules have changed and it just got tougher. However, these guys, if you knew behind the scenes how this thing was run, if you knew how much of this company was run on an Excel spreadsheet, it would make your jaw drop. And some of you already know this person by name, but there's essentially one person that's in charge of all these live accounts and funding them and transferring the money and evaluating if they are successful and need refunding or increase of funding, all that stuff. There's one person in charge of it all. I can guarantee you she has very little time to take a magnifying glass to your account. And they're using FX Blue, by the way. They're using FX Blue to check this stuff out. Right? So, what does that mean? If they're using FX Blue, there's things they can see and there's things that they cannot see. What they can see, there's a number there on your FX Blue report that says number of trades per day. So they can see that, and you can work your way around that. If you're still around 2 or 3, and they're like, oh, we need to see more trades per day, you can say, well, I was trading in the past much lower volumes, and now I'm trading a higher volume, so that number's an average of those things. So you can massage that number a bit, but they can see the number of trades you're taking per day, and they can get into the report and see how that's changed over time. So they can actually see that. So you're going to need to take 3 to 4 to 5 trades a day. They can also see if you're using stops. Notice at the bottom, they can't see the exact stop on every trade, and I'll show you why here in a second. They can't go through. They don't have time to go through every one of your trades and calculate, okay, she got in at this price, the stop loss is here, how many pips is that? There's no way. They can't do it. And there's no report that says your average stop loss. Okay, they can't do that, but they can see if you put a number there. They can go into your report in your history and just look at the stop loss column and see if there's blanks or zeros or if there's actual numbers there. They can see that. They can see your average win versus average loss. And this is a very important number to Kevin, a very important number to the people that are evaluating your account. Okay, so this becomes important. And if you're using risk reward, you're not going to have to worry too much because these should be pretty much in line with each other. Average win versus that, not win percentage, but average win versus average loss. Things they can't see. The number of pips on every profitable trade. They are about $1 amount, most likely. They're looking at your average win. They can't go into your history with a fine-tooth comb and see, oh, he makes 10 pips or 20 pips, or he made 50 pips on this one, but on these he made 10. They just don't have time to do that. They don't have the sophisticated reporting to do any of that. Okay, so we can mix in some swing trades because they can't call us on everything. Trail stops on profitable trades. They don't know if you had a trail stop on something or not. They have no idea. Okay. Now, I'll put some of these slides up in the thread so that you can have these notes. But here are some rules that we're going to have to follow. Number 1, we have to use stop losses. I just don't want too many 10-pip stop losses. Okay. Keep your risk reward 1-to-1, 2-to-1, things like that. A 10-pip stop loss. Holy cow. How do you grow an account? And I can speak from experience because I've been there. I've had live accounts in my past where I was trying to do this very thing that they're teaching you. And it was just bleeding out of my ears, frustrating. That I could have a perfect setup with perfect indicator signals and perfect everything, and it gets taken out because I have a 10-pip frickin' stop. Okay, not too many of those in our trades. Mix some in, I guess. And I'll show you some examples in a second of when that might be appropriate. But not too many of those. Use a higher lot size. We're going to have to. We got to swing for the fences. Don't use $10 a pip. Don't use $20 a pip. That's stupid. But, you know, I gave you your range. Between 50 cents to $3. You stay in that range, you should be fine. Okay? Do take 2 to 5 trades per day. We're going to have to do this as well. All right? Scalp. And please, if you're going for 1.5 pips on your take profits, do you know how many trades you're going to have to place to grow your account? And how many opportunities, especially if you have a 10 pip stop loss attached to that, how many opportunities you open yourself up to hit just one loss. On a 5-to-1 risk reward, one loss can wipe out a bunch of successful trades, and it's incredibly frustrating. So don't play that game. Scalp, we're going to go for small moves, but they're not 1.5 pips. I want you to be 1-to-1, 2-to-1, 3-to-1, and 3-to-1 max. I don't want to see you get outside of 3-to-1 on your risk-reward ratios. So again, the first number is risk, the second number is reward. So if you have a 10 pip take profit on a 3-to-1, you would have a 30 pip stop loss. Does that make sense? So 10 pip take profit, 30 pip stop loss. Or if you're 2-to-1, 10 pip take profit, 20 pip stop loss. Or if you're 2-to-1, you could have, you know, some of these daily swings that we're talking about, and maybe you're going for 25 pips. So in that case, you would have a 50 pip stop loss, and you'd put your lot size in accordingly. All right? Be picky about your entry. Folks, when you're doing risk-reward trading, you can't just get into a trade. You need to have some kind of a trigger that's helping you understand when to do it. Okay? Do not leave your trades open. We don't want to see hedges or price averages in this. Everything has got a take profit and a stop loss. If your trade's been open for more than a couple of days and you can see signals that are going against that trade, and it might be time to hit, even though you haven't hit your take profit or your stop loss yet, maybe you're a little bit profitable, maybe you're upside down a little bit on the trade, but you can see that your indicators and your analysis are telling you it's going the other direction, and it's been open for a day or two or something, pull the plug on it. Just manually close it out. That's what they want to see anyway. Okay, normally I would say let the trade run until it finally hits your take profit or your stop loss. But I think there's room in here to make the argument that we can do AIM or AIL, or AIM anyway, adjustment in market, and say, hey, I've been in this trade now for 3 days. I'm seeing an indication that it's going to start going against me. Why would I stay in it? And you can pull the plug out if your analysis tells you to. All right, let's do a couple of examples of trades. I'm going to show you this. This setup I call it scalp. I have given you access to this. If you go into, if you go into Slack and you go into downloads, you see this scalp chart. If you put this into your data folder, you can now have this inside your Sierra charts. Now, you don't have to have these particular pairs, and you don't have to have these many setups. I have 3 what I would call scalping setups up here. So I have Euro USD, Pound New Zealand, and Aussie Yen up here at the top. And I've got Pound Dollar here at the bottom. These 3 I would consider my scalps. I'm going for 10 pips, maybe 5, I guess, at the least. 5, 10, maybe 15 pips. That's what I'm doing up here on these guys. Down here, this is my swing trade chart. I've decided to use the Pound Dollar just because. You can put any pair here you want. But this is more of a swing trade. So I might be going for 20, 25, maybe my daily pivot trade or my daily scalp trade. Sorry, my blood blanked out. Your cycle trade on this one, like your oscillator trade. This is a 120-minute chart with an ATR of 25 pips. So I should be able to get more out of this chart. Okay, but notice on every one of these, I've got 2 charts. One is my trade chart. This is where I see my trade setting up. And then I've skipped down to a smaller time frame to find my trigger or my entry chart. Okay? Now, I can see a couple trades that I have here. Actually, I have 3 scalps available to me right now. And I'm just going to go, I'm going to do a 2-to-1 on each of these. I'm going to go for just 5 pips. 5, 10. No, give me a 10 pip stop. I got more volume here. I'll probably go for 5 pips on these two and 10 pips on this one. Okay? Can you download in green charts? Does it have to be? No, it can be green charts as well. So the question's being asked, where do I download this? There's actually a video that shows you how to do that in Discord. But if I pull this up, if I go to my local drive, and I go, in this case, it's Sierra chart. For you, it might be green chart. If I open this up and I go here to data, just take that file that's in Slack that I just showed you, take this, download it, and insert it into this folder. And then you'll have it in Sierra charts or green charts, whatever, okay? There's been a lot of comments posted. I'll go back and read those here in a second. Make sure if I need to respond to something. So let's go through these one at a time. Let's go Euro USD first. And I'm going to do a lot size. I'm just going to do, $1 a pip. I can't believe I'm doing this. I'm doing $1 a pip. Let's switch this down to a 30-minute chart. This is kind of what we're looking at. So notice I'm overbought on this 30-minute, wanting to sell off. So I'm going to do a sell trade. Let's accept the terms on this new account. Sell it. There's my sell trade. I'm going to go for 5 pips on my take profit, which puts me at 77. So let's make sure we have the exact number here. Take profit is 1 point. See, I got in at 110.82.3. So this would be 110.77.3 would be exactly 5 pips. And let's do a 10 pip stop loss on this thing. So if I got in at 110.82, 110.92 would be my stop. Okay, there's my first trade. Done. Here's my take profit. Here's my stop loss. On to the next. This is pound New Zealand. I think I can go for more pips because it's a pound New Zealand, a little beefier. My ATR is 20 pips on the 30-minute chart. I'm going to go for 15 on this one with a 30 pip stop loss. So that's a 2-to-1 trade. Okay. Now I'm oversold. Now I should go back and tell you why I'm taking this trade over here. Let's stop for a second. Notice over here I'm overbought, getting ready to sell off. Okay. So I see my signal. I see that I'm in a downward trend. I like all that. So this is a sell trade. I then go down to my trigger, which is a 5-minute chart, and see that I'm overbought, getting ready to sell. This could be used as a trigger for me to say, yep, I'm getting ready. I had a little pullback here. I feel like this is now getting ready to actually go down and do its thing. So there's the reasoning behind that. Similar over here with pound New Zealand. What kind of market do I have? It's a bullish market. I'm oversold in a bullish market. I want to buy. Notice over here, and that was a second ago, it was down here and oversold. But I've had a pullback here. I could wait on this one, maybe for it to sneak back up above the trend line and give me a pullback and then get in. I'm going to go ahead and get in now because we're on a webinar and I'm trying to show you guys how to do it. But I want a trigger to give me evidence that this setup over here is good to go. And I see this pullback here as enough evidence for me that it's time to get going on this trade. So I'm going to buy pound New Zealand. Same lot size. I'm going to do actually, yeah, $1 pip. Oh, wrong trade. That's a sell. Close it out immediately. Oops. You've never done that, right? Hit the wrong button. Buy trade. 15 pips up. I'm at 82, so that's going to take me to 97, which is right about there. And then 2-to-1, so my stop loss on this is going to be something like 72 is 20, so it's going to have to be 30 pips, which puts me at 62. So am I not doing this right? Because this feels more like 2-to-1. So if I'm going for, what's my take profit on this? I want to make sure I do it right. 87.97 is only 10 pips. I want to go 15. So if I got in at 97.87, oh, look at my freaking spread. Make sure your spread's normal before you place these trades. Of course, the nice thing about CoinEx, you have really, really tight spreads. So you won't have a 5 pipper like this that's murdering you in the face, right? 197.87 going to 198. 02. That would give me 15 pips of a take profit. This looks a little more like what I'm looking for. I'm going to put my stop loss just kind of somewhere. This is roughly a 2 to 1 risk reward ratio. I'm good with that. I'm going to leave that in. Okay. That's my market managed coming out of me. Over here, Aussie yen. What's the trade setup? What kind of market do we have, generally speaking? We're still below our trend line, aren't we? Look at how we're overbought. This is a sell trade. Do you see how it's a sell trade? Overbought, still technically bearish. Notice over here, overbought on my trigger. There's another trigger too that says I need to see a break of trend line and a reversal pattern over here, like a 1, 2, 3, before I'll get in. Again, we don't have the luxury because we're here on a live webinar. I don't have the luxury to wait for this. But, I mean, I'd imagine overbought conditions or almost overbought conditions lining up here together. I feel like it's a good trigger to actually go ahead and take this trade. So I'm going to do a sell trade on this one. Yeah, Blake says, watching you put those stop losses in reminds me of how much I hated trading that way with the Empire. Gotcha. Hear ya. Okay, we're selling this thing. We're going to go for, let's go for 10 pips down to 18. And a 2 to 1 puts us something like this. You can find your rhythm. If you like a 1 to 1 or a 3 to 1, you know, find what you like. But this is what you're going to have to be doing now, right? What do we have to do with trades we had open for a while now? This is getting into a hedging discussion. And what I would say is wait for your bigger charts to give you a signal in the opposite direction. Like a 240. So go to a 240 chart, wait for that chart to give you a signal, a bias and a signal in the opposite direction of the trade that's open, and close out of your trade. That would be my recommendation. That's the best advice I can give you in regards to what these jerks are having you do. Okay? All right, cool. Those are the 3 scalp trades. Now what about this other trade down here? What about this this swing trade? Okay, now what's my daily pivot trade? I closed higher, so that's a buy. I'm above my trend line, so that's a buy. I got bullish hikes, and I'm oversold. So this is a buy trying to go to 130.90. Okay? Now, I'm at 130.42. That is a darn near a 50 pip trade. That's a 48 pip trade. I don't need 48 pips. I can go for 30 pips and be happy with that. But let me lower my lot size on this trade. And let me also, I've already got a trigger on the 30. I'm oversold. This thing's good to go. So I'm going to lower my lot size on this particular one. This is pound US. 0.05. Notice what my margin percentage already is. 1930. You see that? Now I'm at 1500. I'm still above the 1000. Okay, but you need to watch this margin level. Don't let it get below 1,000. Okay? Let's go for, see if we go to 130. If we go for 30 pips, that takes us to 72. Or in our case, we got in at 43, so 73. Okay, so there's a 30 pip take profit with, you know, here's a stop loss on that. Again, we're trading 50 cents a pip. We can't lose any more than 30 bucks. So if we put it down here, 50 cents a pip, that means we could have a 60 pip stop loss at 50 cents a pip, and there's our 30 bucks, right? So that could be somewhere down here. This would actually be 50 pips. This is not even as much as that. This is a little bit wider girth, right? You're giving yourself a lot of room here. Now, here's the deal on this swing trade. What if we show up tomorrow and it's done this, and now it's pulled back and done this, and it's starting to give us selling signals? This goes back to your question, okay? Race. This goes back to your question. If we show up tomorrow and we see this kind of crap, and we're below our trend line, we're getting a sell signal, and we did a buy to go up, right? Then even though we're not hitting our stop loss yet, we could probably close out of our trade. It'd be a much more minimal loss. And that's going to help your average win versus average loss ratio. It's going to make you look good to these people that are giving you, these reviews for more money. So that's something to consider. Show up tomorrow if your market has changed, if you're getting signal that tells you it's time to sell, and this trade is not looking as hot as it was yesterday, pull the plug on it. We don't want things open. Okay? Let's go through some of the questions here. Make sure I'm not missing anything. Please, you guys, direct message me if you want into that private channel. I want your... How about this? I'm asking for your engagement. And I'm asking you, if you know someone that's not a member of our group, or if it is a member of them, I'm asking you to kind of quietly spread the word. There needs to be some accountability. Okay? So you can reach out to them and talk to them. And if you know an acquaintance, there's going to be some things we can give to them. Maybe you don't know them very well, but maybe you saw them once or twice at one of the webinars or one of the in-persons or something down there in the Empire, building or something. Ways to kind of spread the word a bit. There's going to be ways to do that, but I want you to get engaged, and the best way to do that is to come here, okay, and do that. All right, it's going back to here. Let's see what questions we have. Better Business Bureau is a bunch of... So, Better Business Bureau said you could get an A+ rating for $500 by your grade. Yeah, what's interesting is Tri-Day Trading does not have any reviews. I wonder if that includes a whitewash. That can't be true. You can buy your rating? Good night. I want to scream. My coach told me I couldn't trade less than 0.1, that it wasn't possible to do so. Now, that is the old broker. So if you think back to capital city markets, you could not trade less than 0.1. And they liked it that way because people were blowing their accounts very quickly. And they already had their money, so they told them to pound sand or buy more coaching, right? So... yeah, you can trade less, but now what they're doing is they're getting back to, we want people to trade these higher lot sizes. In their mind, I believe they've drunk their own Kool-Aid. Does that make sense? They have drunk their own Kool-Aid so much. They have told stuff that's not true so often that they believe their own bull. And so now they're saying, okay, we have this 1 pip strategy with 10 pip stop that's so brilliant and so awesome. Let's just slap some dirty pressure on there, and it's amazing. That we can actually open this up and have people trade $1 and $2 and $3 a pip. And if they do that and they're successful, that's going to be the endorphin hit, and we can say, see, it works. And temporarily, they might have some temporary success stories, for a week or a month or two. But what this strategy they're teaching does, what this does over time is erode your account. Sometimes slowly, sometimes quickly if you get too aggressive. It's just going to be gone. That's the nature of this game. So they've bought into it, hook, line, and sinker, and they're not going anywhere with it. That they want it. That's what they want to do. Plus, they sell indicators, guys. They charge $400 a month for indicators. If you're using market managed strategy and you're an investor in the market, it doesn't take you long to realize you don't need a bunch of indicators. You don't need a bunch of lines telling you when to get in. You have a strategy system that allows you to trade the market and win over time without dealing with all that crap. That doesn't work for them. They have to have you sucking at the teat of the indicators and paying them that fee so that gets their business going, right? That brings the money in. So how do you do that? You've got to teach almost exclusively. You've got to teach scalping strategies for small moves and small pips and have them staring at their screen for 6 hours a day, looking at lines. And convince them that they have to use these indicators or they're never going to be successful in trading. This is the only way to do it, the best way to do it. They have a business. They're trying to sell it, right? Anyway, I get that. That's fine. Craig Bowler Jacker, his name is Alema Harrington. He gets on there and says, I love supplementing my income with day trading. I get it, and he's on a laptop. I don't think the laptop's even turned on. He's on a laptop, and he's clicking buttons, looking like he's, whatever. He's a celebrity endorser. This is all about paying more money for blown accounts. So strange they wouldn't want us to be successful since they are taking a percentage. Yeah. I think they've convinced themselves that they are helping you be successful, and they've talked enough about in their minds that they would like you to be successful, but they don't make their money from your trading account. They make their money when you give them that 15, 20 grand up front. That's where they make their money. That's why they're a giant marketing machine trying to get more business, because that's where their flow comes from, right? Sounds like they want to tell people that they can make 1% on their money every day. That's the talking point. If someone came to me and said they made 1% a day on their account and that they wanted to trade my money, I would tell them very politely to go find somebody else. Because on the other side of that much risk or on the other side of that much profitability, or at least temporary profitability, is that much risk. What's on the other side of doubling your account every month? Losing it the next. Right? Can you download green charts, or does it have to be Sierra? Oh yeah, we talked about that. You can put these charts here that we have either in green charts or Sierra charts. Just don't let anyone from the Empire see this stuff, because they're going to ask what the heck's going on. They don't want you going anywhere else. It's going to take them away from their indicators, and I get that. That's their business, right? What we do with the trades we have open for a while, I think I answered that. Super glad I don't have to trade that way anymore. I don't miss the stress. Okay. All right, you guys. So your homework, direct message the third wave. Direct message me so that you can get into that private channel and we can start collecting evidence and cases and stories and experiences and build enough, build a case that we can go and put this forward and get these guys accountable. And I want you to, think through how you want to build your system and your strategy. Like I said before, you need to live somewhere in between these two extremes. And I don't think this is an extreme, but I mean somewhere in between these two different spots. Between trading $3 a pip and going for 2 pips, which in my mind is ridiculous, or going at 30 cents a pip and going for 20 pips, which is extremely reasonable. Somewhere you're going to have to live between those two. Find out where that's at. Make sure that when you fully load your trades up, you're not exposed more than 1% of your margin level. Okay? Now, there's a discussion that's going to continue to happen inside that private channel. So as you have questions, as you have experiences, if I see some things that could help you in your corporate accounts, that's where I'm going to be going, guys. I'm not going to talk about this stuff in Origin anymore. All this Empire stuff, it's going to be relegated to that private channel, to this, right in here. This is where all that stuff's going to go, in here. So if we have another webinar like this, it's not going to be public to Origin. It's going to be in here. I would prefer to wipe the Empire name and all that stuff completely out of all of our other content and keep it right in this spot. Okay? Cool, guys. I appreciate you being on tonight. Look, I think you hear it in my voice. I'm extremely dedicated to your success. If you still have a corporate account, I want you to be successful with it. Lean on me. I'm here to help you as much as I can. All right? And look, this was a part of your journey. Don't be too upset. I've had this conversation with many people. Finding the Empire, paying them a bunch of money, getting a coach and getting into their system, this has all been a part of your journey. You're still in the mode where you're creating, how you doing, Kimber? where you're creating something, you're building a business, you're building something for yourself. These guys are just a part of that. What you and I together can create with your own money and your own experiences can go past this. We can get to where you want to go. 3, 4, 5 years from now, you can have a trading business that's giving you income that you're making disbursements from on an annual basis, right? Something you can build and create and be proud of. Stick with me. I'm dedicated to your success, you guys. Be good. We'll talk to you. On the next webinar. Be good. Bye.